Good morning, everyone. I'm Martha Stokes. I'm a chartered market technician from the buy side. I am retired and I love to teach people the inner workings of the market and how the professionals view the market. Since I am a professional, this is my legacy. I'm trying to leave behind my vast knowledge so that you can trade better and have more success in the market because you do matter. The market does depend on retail traders to move price, mostly to move price up and down, oftentimes speculatively, and oftentimes to your loss as we go through. So, what I want to do is talk about today about the inner workings and how the market actually functions because what I read all over and I get lots of questions and things from various different areas. And I'm so surprised at how limited the knowledge is or the misinformation that's out there. So, today we're talking about foundational knowledge. This is something everybody needs to have. Yes, you take these webinars and videos and you do it yourself and you try to figure it out and you're working on everything and you think you have some strategies and they work for a while and then they don't work for a while and so on and so forth. What you need is a foundational knowledge. There are 6 primary market conditions. We have the bottoming market condition. This was a intermediate term correction bottom. It was also the flash crash as well, which accelerated the downtrend and then rapidly moved it back up within a few days. It returned very quickly within a month to where it had been before without the only huge move up was the dark pools pushing NVDA back up. This is NVDA back up into its lowest low that they had purchased before and moving it up further into their buy zone, which is right here. It is important that you understand all these dynamics. So the dark pools always make the bottoms. And so if you're selling short, you need to be aware of where a correction or a bottom will be within a short-term trend, an intermediate-term trend, a long-term trend, the whole cycle of the market. So bottoming market is where it all begins after it's crashed. And we are a long ways from that bottoming market. I'll show you in the weekly chart. There are also trading ranges. Trading ranges are mostly happening not on the indexes right now, but on individual stocks moving sideways because they they haven't created a new technology or they're not using a new technology and they're being left behind. And this new technology is displacement and disruptive. And there's over 20 new technologies emerging almost all at once. It is a major digital revolution. Everybody's calling it the fourth industrial revolution, but that is not what it should be called. It is the first digital industrial or revolution. So digital revolution is the appropriate one because it is everything being digitized, everything being on the internet or in the cloud or whatever. And it's dynamic. And NVIDIA is a big representative because it is one of the most powerhouse companies right now because it's working with open source AI and all this other stuff. So it's the powerhouse behind, it's the main engine. There are many, many other companies that are also moving and advancing technologies very rapidly, and it is impacting the financial markets. So, but some companies like Verizon and other older companies that aren't reinventing are in a trading range. Then we have the platform market condition. This usually happens after the bottoming market condition during a period when people are uncertain and they're afraid and they're worried. So they don't trade much and they don't invest much. The retail side and the smaller funds are what move price up. Professionals nudge and have very small price action. There's some right in here, nudges going, and then suddenly smaller funds will run in and adjust and move the stock price up. So you have a very dynamic market. There's also the moderately uptrending or downtrending. Moderately uptrending is in a bull market, moderately downtrending is a bear market. There's also velocity up or down, which is really fast price movement, speculative gambling mode situation, always caused by retail traders and small funds managers. Pro traders will be selling as the stock market goes into a velocity run, and it can do that at any time. Then we have a topping market condition, which is part of the bear cycle. So we have topping, which starts the bear, moderately downtrending, which continues the bear, velocity down, continuing the bear, bottoming market ends the bear, and then platform starts because people are afraid to invest or trade, and then we move to a moderately trending up market condition, which is what we have right now. Now, moderately trending market conditions have lots and lots of sideways action. And if we put support levels under here, this is the first fundamental support level for NVIDIA. This is where its fundamentals are. You need to learn to be able to see where the fundamentals are. The fundamentals were way down here before, and then it has been improving over time this year and doing very well. So it is in a correction mode, but it is not a good sell short because it's going to find support at the lows of this fundamental level. Now, in a cycle, each market condition is unique. The trend line patterns are different. This is because different market conditions are created by different market participant groups. There are 12 different market participant groups, and that's growing. And that group dominates and controls how price moves up or down at that moment in time. Market conditions are your roadmap for navigating the market activity over time because the market cycles and cycles. Bull market for 10, 8, 15, maybe 20 years, bear market for 1.5, 1.2 market years, that type of thing. You have to learn to trade differently in a velocity market than in a platform market. The stock market cycles, and each market condition is a different part of that cycle. So we have 6 primary market conditions for an uptrending market, and about 3, because trading range can fall into that as well, for your bear cycle. That's why it lasts shorter, because the bear cycle is always shorter than the long-term bull market cycle is always longer. And we talk about an AI bubble, and it's not here, folks. It's not here. Let's take a look at the weekly chart. When we look at the weekly chart, we can see that NVIDIA started out lower and then had a platform and another platform. And pro traders caught that platform. Oh, they're accumulating right in here. So let's nudge this. And then it runs up speculatively because retail gurus and small funds managers hear about how great NVIDIA is after the fact. You should be getting in here, but you get in up here. And then all of a sudden it corrects because it's gone too vertical of an angle of ascent and corrects a little bit more, a couple of nudges, and it moves up again. Now it's in a sideways pattern where there's a mix of different market participant groups. It goes a little bit higher and is coming down. It should support here, or this is the fundamental level right here. So we can see on a weekly chart that the daily chart activity for that is a weaker. So if we have a flash crash or anything like that, it will collapse and move down into this fundamental level, but it will not fall further because that's where price will be below fundamentals, and the dark pools are going to come in and pop that up. Dark pool pop, dark pool pop, dark pool pop, pushing it up along with pro traders. Now, if we look at the monthly chart, we can see that this has been a long-term consideration that's going on for NVIDIA, but it can last for a long, long, long time. It has corrections that are working, and then a long, boring place because cloud technology came and nothing happened with semiconductors, and then a little pop in 2016 with corporate buybacks, and then we had another little dip in here. This is a correction that should have started a bear market because that would have been the end of the bear market, but it didn't because corporations were pushing price up and pushing price up with a massive buybacks that are pushing the price up. Then we have the 2020 quick bear cycle, and it did not go down as far as the Dow indexes because it found support because in its fundamental levels, and then it has steadily moved up since. So we have cycles in the Dow and the Nasdaq and the S&P 500, but we also have cycles in the stock itself, and these cycles continue. Now we can have long cycles, but these are corrections, and how that stock is impacted by corrections depends on where it is in its product cycle and whether it's reinventing, which NVIDIA did, and so now it's on another rocket. It is moving sideways primarily right now. It's going to find support here unless there's a flash crash, but then it will find support at the neckline of the bottom and then continue to move up. You need to understand market condition and the cycles of the market. I'm Martha Stokes, and that's my topic for today.